Good afternoon, everyone, and welcome to Stock Market Today. It's Allie Corum and Justin Nielsen here with a breakdown of the action in today's session, where we saw maybe a little bit more encouraging signs, Justin, after strong action at the end of last week.
Yeah, it certainly was a decent close, well off the lows, and especially when you were looking at the futures market over the weekend. So we'll take a look at the market, of course, and we'll also take a look at a few stocks, including some oil and gas plays. Just look at an ETF there, XOP. Also looking at Northrop Grumman defense stock, that's NOC, and we'll finish it up with a material stock, Steel Dynamics, still doing very well. That's STLD.
Yeah, hey, those are three great areas to focus on today, Justin. So we'll get to that. But first, let's check in on those major indexes. So today we had the NASDAQ close up by the end of the session by about 0.4%. Same for the Russell 2000. We did have the S&P 500 close down just 0.25%, and the Dow down about 0.5%. So Justin, we are in the early stages of a rally here. So what do investors need to be looking for now?
Well, before you get too excited, just keep in mind, this is one of the things we always do. We always take a look at the indexes and we say, look, one day is not enough. 2 days is not enough. We always wait for that fourth day, waiting for a follow-through day. But look, David Ryan, he got on the IBD Live show today, longtime investor, 3-time U.S. investing champion, and he said, hey, there's a lot of reasons to be very suspicious of this rally. This might actually be an opportunity to sell some of your stocks into the rally. Now, there are these areas of strength that we continue to see in energy, especially oil and gas, the materials, gold stocks, cybersecurity. So it's not to say that there aren't pockets of strength, but the market as a whole, there's a lot of reasons to be a little suspicious here. Plus, we do have a lot of headlines that could be rocking us back and forth. That's not necessarily to say that, we can't have a rally here, but it's one of the things to just realize that there could be extra volatility, and that can very easily knock you out and make it a little frustrating to gain any traction.
Right. And for the NASDAQ here, from a technical perspective, what about potential resistance at the 21-day line? That's been an issue in the past.
That's certainly one of the things that I'm going to be looking at very closely. We often look at the indexes being above their 21-day moving average line as a first step to say, hey, this is something that's working. So far, that's not something that NASDAQ has been able to sustain for very long. It did it very briefly at the beginning of this month and immediately reversed. So that's one hurdle it has to get up above. And again, keep in mind, there's multiple signals that you can see. So number one, maybe we get a follow-through day. Number two, maybe we get above the 21-day moving average line. And then number three, can we stay above that moving average line? It's not just about getting it above it one day. And then we'll start tackling some further things like the 50-day moving average line, the 200-day moving average line. There's a lot of areas where we could potentially be hitting resistance. So beyond the 21-day moving average line, you're looking at that 14,500 level. That could be an area that we'll run into. So there's a lot of obstacles that we're going to have to overcome here before we get too positive. I will say that there are more setups that were looking interesting as I was going through my screens this weekend. So that's a positive, but the setups are not in your typical growth areas. That's still an area that looks very damaged in a lot of cases. You're really talking about a lot of the cyclical names, really exactly what we talked about at the open, your energy, your materials, your defense, not your typical tech names that we're used to.
Right. Well, let's check in elsewhere, like the S&P 500, see how it's doing, also below its 21-day line and that 4,400 level. Key moving averages to watch here as well include the 200-day and eventually the 50-day line. But it's not like we're seeing a total breakdown after the encouraging action last week, but that's not to say that just because we get one day that seems slightly less volatile, that tomorrow won't bring more volatility.
Yeah, I feel like we're doing the old economy play, where the economists are always saying on this hand and then on the other hand and then on the other hand. I think what it speaks to is there is still uncertainty here. So I think what investors really need to do is be able to kind of hold both scenarios in their head, almost like a little Schrodinger's cat situation here, and let the market kind of prove itself one way or the other. Scott St. Clair on IBD Live today was saying, look, this is not a time to necessarily be very heavy long or very
Right.
heavy short, because it could really go either way. So start coming up with your levels, your exit lines, your entry lines, all of those things. But I think more than anything, you're going to want to take it slow. Move in slow, let the market give you that feedback that your stuff is working before you put more money to work. If it's not working, then back away pretty quickly, and you're not going to get too hurt. That way, you can stay in sync, bend with the breeze, and not
Mhm.
plant your flag too stiffly here, because that's where you could potentially get broken.
Mhm. Yes, we will stay open minded. Some wise words there, Justin. Quick look at the Dow here, trying to get back to that 34,000 level. And the Russell 2000, here's the IWM ETF, up a little today, approaching its highs from earlier in the month. And also, just a quick check in on the 10-year Treasury yield. The overall trend is up here, but down today pretty sharply.
Yeah, and this is one of those things that, I mean, you've got, again, a lot of headlines here. There it seemed like it was an increasing chance that the Fed was going to be potentially raising 50 basis points in March, and
Hmm.
that seems to be kind of slowly coming off the table. But a lot of the analysts out there are still saying that they expect a lot of rate hikes. They just might have to go a little bit slower. It's very unusual for us to be, when there's war and stuff like that going on. That's usually not a time that the Fed wants to be doing some tightening, but they also have this big inflation numbers that are coming out, and that's not something that can be ignored. So they're kind of in a rough spot right here, and it's going to be very
Right.
tough to get that soft landing that they tend to try and go for. There's really kind of a threading of the needle that they're going to have to try in order to get that soft landing
Yes.
here. So they have their work cut out for them.
Yeah, that's exactly right. Okay, well, let's take a look at some interesting tickers of the day. So here's a look at that XOP ETF you mentioned, Justin. This looks like a pretty clear buy signal on the chart to me. But again, should investors be sticking their neck out at this point in the market? And also with the overall trend that we've been seeing in the price of oil itself. Did you? Can you hear
Yeah,
me?
you broke up a little bit, but I think I caught the gist of what you were saying. So, yeah, the XOP, and again, this is the explorers and producers. This has been one of the areas of strength, and while we have a breakout here, again, I'm not trying to stick my neck out too much. That one way you can do that is by having smaller position sizes or just having your overall exposure low, whichever way you choose to do that. But certainly, if you look at this whole sector, this has been the area that has by far outperformed everything else. This is where all of the action has been. You're getting 20% moves plus for the year in a lot of these when you have the markets that were off 20% from their highs. So this is certainly an area to be looking at. Now, whether you use an ETF to get that diversification across a number of stocks, or whether you go with some of the leaders, there's plenty
Mhm.
in this industry to look at. And it's not just the explorers and producers. We've been talking about XLE, which is dominated by Exxon and Chevron. That's been looking strong. A lot of these stocks are kind of already out of there. So,
Yeah.
on the one hand, you have to look at XOP and say, well, gosh, is this a little bit late to the party? But on the other hand, as you mentioned, it is a breakout and it does get you exposure to the whole area.
Right.
We did put this on Swing Trader today, and our idea here is that we're just going to look for a small gain. We're going to take our profits into strength if we can, and move on. But we wanted some exposure to a group that was working, and the oil and gas is certainly a spot that is working very well right now.
Yes. Well, nicely done to the swing trader team. Where exactly was the entry? Was it a little later in the session, early on in the day?
Well, we kind of gave it some time, so we waited until the first hour. A lot of times we'll use like the first hour high to make sure we can stay above that, and we did. Now we did pull off a little bit. We were actually negative on it for a little bit while it pulled back down to 114. Our entry was in the 115 area, and so that's we're up on it so far.
Nicely done. Okay, next on our list, let's take a look at aerospace and defense with Northrop Grumman, ticker NOC here. A strong breakout after edging above a buy point on Friday. It's been moving more or less sideways for quite a while, but defense is definitely an area on a lot of people's minds right now, Justin, and this whole group really moving in a big way today.
Yeah, we certainly had a catalyst last week with the invasion of Ukraine. So that does kind of change the prospects a little bit. And there was a lot of tight action going on in a lot of these stocks. We had been talking about Lockheed Martin, LMT, Raytheon, RTX. There's just a whole host of them. And when you see a lot of stocks in an area that are looking good, it's worth paying attention. Now, it's also worth taking a look at like XAR, which is the Spider Aerospace and Defense ETF. This looks a lot weaker than a lot of the stocks that I just mentioned. So in this case, you sometimes have to look and say, okay, is the ETF bogged down by some of these that aren't participating in this move?
Yeah.
Well, if that's the case, then start moving your money over into those leaders, the ones that are working. And, those were just three off the top of my head, but you can go down. There's also L3 Harris, LHX, there's General Dynamics. There's a lot that are breaking out into new highs right now, as opposed to XAR, which is trying to get back above its 200-day moving average line. But the biggest warning is be careful of buying extended. I think Northrop Grumman gave you your last chance this morning, but it is extended now, and you can see that it's beyond that blue shaded area that we have on MarketSmith. So it's, when you start buying extended, then you're opening yourself up to the risk of a normal pullback potentially shaking you out, and you don't want that to happen.
That's exactly right. And with those ETFs, we always talk about knowing what you own. So digging into those is always a great idea. And perhaps some of the difference there with it being aerospace and defense, you got to wonder how much of a weighting Boeing has in some of those ETFs. So something to look into on that front. And let's also take a look at steel with Steel Dynamics, STLD, on a little bit of a hot streak here since Thursday with that upside reversal, following that up not only on Friday, but today as well, clearing a consolidation and getting to its highest levels in a number of months, Justin.
Yeah, and this is another area that we're seeing a lot of strength in, the materials. If you just looked at XLB on Friday, that was the leading sector for that day. A lot of these material stocks have been looking stronger. And here again, you can look at what is leading right now. Steel is definitely one of the areas. Nucor is something that joined leaderboard last week. That's another one that's showing breakout action. So how do you handle this right now? So for Steel Dynamics, we identify this as kind of a consolidation on STLD. I would say that, like Nucor, it had a little bit of this double bottom look to it. And so that would make 68.17, add 10 cents to that. That's your buy point. But, I could also see, look, in this case, you had kind of resistance right there at 69. So it hit that around 68.91. Then it got to 69.02, turned back away. Then it got up to 68.17, then got turned away. So I wouldn't mind just waiting until that higher price. And here again, just don't let this thing get extended on you. Right now, you are still in that buy range. It was a very dramatic day on Friday. As I said, materials were certainly leading. This was one of the reasons, a 9% gain on that day. And we followed up with gains today as well. So it is starting to look a little bit long in the tooth, but it's still technically in that buy range. But you do have to be careful. Whenever you have a stock that's gone up that much that quickly, you got to expect a pullback.
Yeah. And that's even in strong uptrends and power trend markets. We have all of this uncertainty that we're dealing with. So being laser focused and having the ability to pinpoint those proper entries, and hopefully it's a little bit of an early proper entry, the better, Justin, at this stage.
Absolutely. And, one of the things we also talked about on IBD Live this morning was the whole idea of sometimes you'll see these setups, you'll see this action, and sometimes you don't understand the reason why. So it's often best to first identify what is happening. And you can see that in the chart, and then do your digging why. I would say that for a lot of people, one place to start, Jed Graham did a great article last week on some of the ramifications of this Ukraine invasion, what that means for economics, the sanctions, all of the things that go into play. So that could be a good place to start your understanding of what can happen with stocks on these different scenarios as this Ukraine invasion plays out.
Yep. So true, Justin. Thank you so much. And thank you all for tuning in. We'll be back with more tomorrow morning on IABD Live, where we will be joined by David Ryan. So we hope you tune in, investors.com/IABD Live. And it's the first week of a new month starting tomorrow, if you can believe it already. And we will have our monthly scorecard webinars, Swing Trader tomorrow, leaderboard on Thursday. So looking forward to seeing everyone for those monthly webinars. If you are a subscriber or a trialist, you will get more information, a little bit of a deep dive into the strategic thinking behind the last month of performance, what we're looking at for the month ahead. So it's going to be great. And we'll see you for that upcoming this week. And we'll see you right back here tomorrow.